As we wait for the rest of our audience to join us, I'm going to go ahead and get us kicked off. My name is Shane. I run the events over at 10 Capital Network, and we have another great event for you today. If you have any questions during the session, please feel free to put them in our chat box, and we'll get to them in our Q&A portion. With that, I'm going to pass it off to our CEO, Hall Martin, to get us going.
Hey, thanks, Shane. I want to thank everybody for joining us today, and want to thank our speakers here today. Today we have with us Dan Burns of the Sonoran Founders Fund. He's going to be talking about investing in proactive health and human performance. And then we also have Bentley Adams talking about Way, an example of one of these applications as well. With that, let me go ahead and turn it over to Dan, and Dan will kick off. And Dan, tell us a little more about yourself, and then let's go ahead and hear what's going on in this space.
Nice to meet everyone. Look forward to talking about the topic of investing in proactive health and performance. Paul, we want to just trigger me when we feel we have a critical mass here?
Sure. Well, we have a couple more people coming in, so we'll kick off in just a moment. Yeah. While we're waiting for that, for those in the audience, Kara, Jack, Sam, thanks for joining us today. Want to just talk a little bit about 10 Capital. At 10 Capital, we help form capital. We help startups find investors. We help angel groups find members, and we also help VC funds find limited partners. We've been doing this since 2009. We originally called Texas Entrepreneurs Network, and we were helping startups in Texas raise funding. We just kept growing our investor network over the years. And then in 2017, we went national with our program because we were getting calls from outside of Texas and wanting access to the investor pool. And so that's how we got to where we are today. It's a sizable network of 20,000 investors. A third of them are angel, a third VC, a third family office. So it's been a great trip building the network over the years. We've had a lot of fun. People ask, tell me, look like you like working at 10. I say, no, I love working at 10 because I get to do what I like to do, which is help startups find investors and help startups, bring new innovations and disruptive technologies to the marketplace. So that's a little bit of the background on the 10 story. And if anybody has any questions, glad to tell you more about it as well. We have a portion of our audience here already. Let's go ahead and kick off into it, Dan. If you can go ahead and kick off your slides, love to hear more about the topic today, which for those who have not heard yet is investing in proactive health and human performance. This is an area we see increasingly a number of deals coming into. And with that, Dan, let's hear more about your background.
Terrific. Yeah, so again, thanks for joining, everyone. My background is mainly as an entrepreneur. I actually started my career back in the late 90s after some time in consulting. I ended up working at the WNBA in the early years of the league's launch. So it was an entrepreneurial venture within the world of sport, as part of the larger NBA league offices, but we were a small entrepreneurial team of 20 people launching a league in a women's team sport where historically women's team sports had not had sustainable success. We had a great experience doing that as a small team. We're really proud that 2 decades plus later the league is still around and actually really starting to thrive right now with women's basketball, values it, and I think it's made a tremendous societal impact. So that's how my career started. Went back to business school after that, ran the Business to Sports Club up at Harvard Business School, and really from my WNBA experience recognized that I was passionate about entrepreneurship in an area such as sports, fitness, well-being, where I had a great deal of interest. And so was looking for the right opportunities. Back then, sports tech was not really a thing. The sports industry was really only starting to be recognized as kind of a bona fide, business industry. But it really seemed like through tangential areas related to sport, there were going to be a lot of emerging opportunities. Got connected to a gentleman out here in Arizona named Mark Verstegen, who had started a company called Athletes Performance. I'll talk more about that here in a bit. Came out for the summer between my 2 years of business school, helped him think through a business plan, was really enamored by the opportunity, became his partner, and for 2 decades, we grew the company that ended up being called EXOS. So I'll come back to that. But really, sports entrepreneurship has been kind of the theme of my career. I actually now teach a sports entrepreneurship course in a master's program here at Arizona State University. So beyond that, I'm really passionate about opportunities where there is a mission orientation. And I think sport lends itself to that very well. So many positives can come from the essence of sport. Healthy competition, teamwork, health and performance, the art of coaching, the mindset or mental element, certainly nutrition and how athletes look at food as fuel, not to mention societal change that can emerge from an industry like sport. So I am always looking for opportunities where I feel there is a mission that can help make the world a better place, make people healthier, help them achieve their goals, and believe those make great investments when companies can do that. And kind of finally, I'm always looking for opportunities where categories can be pioneered. And in the space that I operate in, human performance, proactive health, traditionally, there have not been categories that have been defined within those. At EXOS, we really pioneered categories of sports and human performance, had a lot of success doing that. And I think that there are many really interesting opportunities within this space right now as consumers start to understand the impact in areas such as preventative health, human performance, to pioneer opportunities, and they can be very large opportunities if done the right way. So that is kind of what I search for. And now let me tell you about EXOS. So I joined EXOS. It was called Athletes Performance at the time, right out of business school. What really appealed to me early on is Mark Verstegen had opened a facility here in Tempe, Arizona, 30,000 square foot facility, great entrepreneurial story that we won't have time to get into today, but did a private-public partnership with Arizona State to build a facility on leased land. What he was doing was integrating together a series of disciplines that had always been kind of standalone before, from sports performance, physical therapy, nutrition, under one roof for elite athletes who were seeking to maximize their performance. In the past, athletes in the offseason would have to cobble together those resources. The programming was not integrated and not personalized to the extent that it really needed to be for the best athletes in the world. So Mark and the team were doing a great job of that. Top athletes like Mia Hamm made it a ritual to come to Athletes Performance in the off season. And it was clearly at the tip of the pyramid, leading edge of this field of sports performance. Always seemed to me that there would be a greater opportunity in broader markets once we really had established ourselves and the field at that tip of the pyramid. And over time, we were able to do that. So let me see here. There we go. So we started from that sports performance foundation where an athlete would come in, work with a team of 8 to 10 specialists. It was a service-based business. I always call it a really cool small business in that tip of the pyramid space of elite athletes. And the best athletes in the world would seek us out and we would deliver outcomes. And the reputation built. We opened several additional sites in sporting hubs in California, Florida, and Texas, as well as Arizona. We started working internationally. Teams like the German national soccer team brought us in to support them leading up to World Cups, where they had a lot of success, ended up winning the World Cup. And so organically, we grew. And it's still a small business. We ended up growing to about a $5 million, by about 2006, revenue business in sports performance, profitable, never raised a dime of outside capital at that point. Had a lot of publicity that was kind of through earned media, and had really established ourselves and the category. We had a decision to make in 2006 about, do we stay a leader in this niche space, or do we seek to extend that into much larger markets where we recognized high performance was a really important component to success. And in order to do that, we recognized we needed to invest heavily in technology so we could scale, and we would need outside capital. Along with Mark, we decided that, in our words, we had a responsibility to help others where we knew we could. And so we took that approach. We extended into the military first as a pretty close extension, working with the special forces. We actually helped to create and then earn a contract across all the special forces to deliver human performance services and coaching. And then we extended into corporations, leading Fortune 500 companies who view their human capital as a critical differentiator, working with companies like Google, Intel, IBM, we began bringing coaching through our methodology and leveraging technology both inside and outside the center environment to deliver coaching in a very personalized way at scale. And then we continue to invest in our technology, in our platforms, so we could scale that. We don't believe technology replaces great coaching. We believe technology can amplify great coaching and allow it to scale. And through rules-based engines that take inputs such as biometric, biomechanical data, somebody's goals, programs can be generated in a way that's really rooted in the science and highly personalized for the coaches then to do what they do really well and to coach and eventually to build community and deliver strong impact. So at EXOS, we did that. We raised over $70 million of capital, spanning from the venture stage through the growth stage. Company started to grow pretty quickly. The employer space became our biggest growth engine. Today, we work with over a quarter of Fortune 100 companies with our programming. By the time we sold the company in a buyout event in 2018, we had surpassed 175 million in revenue. It was low single-digit attrition, 90% plus recurring, and had built I think a very strong business. And most importantly to us, we were delivering very strong impact to millions of lives through our integration of these disciplines that were always at our roots. And today we use the 4 pillars of mindset, nutrition, movement, and recovery to really define what those pillars are. And all of our programming integrates across those disciplines, because in the space of sports or human performance, only by integrating those effectively in a very personalized way that is engaging to the performer, can we drive our outcomes. Company continues to grow. Today, I stepped away into a board executive chairman role a couple of years back, and now I'm involved in investing as well. But that's the EXOS growth story. That's how I spent most of my last 2 decades. So now kind of transitioning to the theme of today's talk, which is investment. Obviously, having been steeped in this space for quite some time, I'm quite interested in companies that meet several criteria that I think really lend themselves well to success in kind of our emerging world here. In particular, companies that can utilize user inputs and or lived experience data. And there's such a wealth right now of that type of data that we all capture, right? I'm sure if I ask most of us in this, in this audience, have an Apple Watch or, whatever it might be, whatever device you use to capture data in your daily living, in your exercise, how you sleep. And, companies that can take that data and translate it and deliver personalized coaching in a way that really connects, is based on real science, and can build that supportive community reinforcement, we think are positioned for real success here going forward. 3 more specific themes that I really look for, and that I had success as an investor investing around. The first is kind of what we call the proactive health, growth, and opportunity. And many may be familiar with this. Traditionally, healthcare in our country especially has been very reactive. That's how doctors are trained. That's where the vast majority of spend historically went. But when you really look at all of the issues that we have, right? 7 of 10 deaths in this country are caused by chronic disease. Much of that is preventable. COVID certainly shined a spotlight on that, given the comorbidities. If you look at the global preventative healthcare market, by the end of this decade, it's expected to grow to about $350 billion. It's growing at about a 10% annual growth clip. There's absolutely growing public awareness, and now real payer and government initiatives and support behind that, as it's really has been recognized increasingly over the last decade, how effective, proactive, preventative health can pull cost out of the reactive healthcare system and lead to far superior healthcare outcomes. Kind of related to that's the wellness space. That's a $1.5 trillion global market right now, also growing quickly. So these are big spaces we're talking about. The growth trends are extremely favorable. We think those will continue. We kind of define this space by mindset, nutrition, movement, and recovery. And there's a lot of opportunity within that. Specifically on the data piece, as more and more people can self-quantify and collect data, we see the real issue here being what we call the so what, now what, right? There's so much data, and we benefit so little from the data we collect today. You know, it's great to know that I need to take more steps or sleep better, but the precision of the interventions can be so much greater than what most of us benefit from today. And emerging models that can take expertise, translate that data, contextualize it, and deliver it back in usable, engaging forms, we feel is a very powerful investment thesis on quite a few opportunities. And finally, if you look at kind of this space, it's really littered with what I call broken old models. And many of these have finally started over the last decade or so to be disrupted, but there's so much more opportunity ahead, right? Easy examples. The traditional big box fitness center, the old model of a big box fitness center is, guilt people into signing up, kind of new year, new you, and then really don't do much to try to get people to show up, because that guilt will sustain. They likely will renew their membership. The more they don't show up, the more memberships you can sell. And that's how the big box fitness industry worked for decades. People didn't like going, but they would, because they would feel guilt. Diets, right? People don't like dieting. Diets aren't effective. 83% of diets fail, and about a third of them lead to eating disorders. But for decades, nutrition has been really commensurate with dieting. We'll talk more about that. But that is a broken model, one people don't like engaging in. But again, out of a feeling of kind of guilt, they will, and they do, and companies have been successful. But to us, that is not the model for a sustainable go forward business in today's world. And there are many more opportunities like that, right? Companies are marketing based upon affinity groups, right? Might be people who are about running gear as an example, but they don't know anything about those runners, about that customer set. And so a lot of the marketing really misses the mark. People don't want to be bombarded with that. They don't like that. They tune out. It's not effective for anybody. So these are all examples of models that we've invested behind disruptive, entrepreneurial ventures that we think can help create new categories that consumers really do find value from, gravitate to, and are able to access, personalized models of support that make their lives better. So, give you some example companies. I'll give you 3 examples that we currently investing behind. I'm a partner at Sonoran Founders in the Southwest, but we will go beyond that thematically. And based on my background, we invest in quite a few companies in the space. So Pix Health is a company based here in Arizona, focused on the epidemic of social isolation and loneliness. It's an issue that is very much in the public eye right now. 1 in 3 adults is chronically lonely. The challenge is most traditional interventions are based on support centers where you can talk to people about your depression and loneliness. And guess what? When people are in the throes of being lonely, they don't want to talk about it, and they definitely don't want to talk about it to a stranger. And so those solutions tend not to work very well. Pix has created an app that is really based on a chatbot, and it has activities that have been proven to engage people. Virtual pets, as an example, that you log in, you take care of each day, the chatbot gets to know you. People are willing to interact and open themselves up. And then there is an in-person component that comes behind that once people are in the right mindset. And Pix has found they have been able to greatly reduce ER admission, readmissions, and now payers in the Medicare and Medicaid space are gravitating to the solution, because it is addressing social isolation and loneliness as its own epidemic, not as a symptom of something else, which is historically how it was treated. Pix has grown in the last 2 years from $1 million to $15 million of ARR, should be over 20 by the end of this year. Is having a lot of success pioneering a new category that was kind of right out there for people to see. but traditionally was overlooked by the healthcare space. And again, they are preventing a lot of chronic health issues and really addressing it with very vulnerable people. So a company we're very proud to support and is having a lot of success. Dash LX, another Arizona-based company. I mentioned before kind of that affinity marketing issue. So what Dash is doing is taking lived experience data that, again, as people, we are collecting on ourselves every day. People then are opting in to sharing that data with companies that that make products and deliver content in areas that are in line with their interests and passions. But then Dash is helping companies use that data, interpret it, contextualize it, analyze it, and deliver back content, product recommendations, community that is very specific to the actual lived experience of that person. So if I'm a runner and I'm running in muddy weather, I'm going to be getting content and product recommendations that are very relevant to those conditions. If I'm running in 95-degree blazing sunshine, like here in the Valley in Arizona, I'm going to be getting a totally different set of recommendations, along those lines. And so the brands are recognizing they don't know how to do this, but this is a much better way for them to engage with their consumers in a way that their consumers want to be engaged with. And Dash is working with many leading apparel, footwear, other sporting category brands, and is really starting to get some good growth behind it now in that space. Final example, we'll talk a lot more about this today because we have the founder of Way us is in the nutrition space. I mentioned dieting before. We don't talk about dieting. It's not part of our programming. Food is fuel. It's critical fuel to our elite athletes. It's critical fuel to all of us as high-performing executives, investors, and people, because food is what gives our brains the fuel they need to be effective. It gives us energy, and ultimately should be a source of joy. But it's not when we talk about it in terms of dieting. So when we always tried to translate nutrition from our elite athlete space, where we are helping our athletes build a very personalized, healthy, joyous, engaging relationship with food, and helping them to dial in, the food, the approach to nutrition that is most effective to helping them perform. Then we look at the huge gap between that and the consumer space, which is still based on dieting. And so what Way is doing is using technology to help scale the approach to intuitive eating and building a much healthier, more positive approach between people and food. People don't want to be caught in this dieting cycle, but right now, unless you have a lot of money and have access to really top level intuitive eating, dietitians, you don't really have any alternative. And so the world is kind of telling you, well, you probably should look at food as part of diets. And so Way is providing a very different approach, in our view, creating a new category as they really blend nutrition with mindfulness. And we're really excited for a company like Way now to kind of cut through that noise and to bring that to a much broader set of people who can benefit from it. So those are some examples of companies we invest behind. There are many more opportunities in this space, but hopefully that gives everyone a flavor for where we see really strong emerging opportunities here in the decade ahead. So I know we're going to save questions here for the end. I think I'll turn it back over to Hall, and he's going to introduce Bentley. But I know if you have questions, feel free to put them in the chat, and I will, after Bentley's presentation, be happy to answer any of those.
Great, thanks for that, Dan. I think we have I have a number of many questions I'd like to ask you when we come to the end of the presentation from Bentley. But let's have Bentley come in and talk more about that example you just brought up, that new category that's there. We have Bentley Adams of Way. Way is a mobile app that talks about mindfulness and is a good example of this new category that Dan talked about. With that, let's go ahead and hear from Bentley about how this works and get a more solid example of one of these applications. Bentley?
Yeah, thanks, Hall, and thanks so much, Dan, for telling the story. I love hearing the EXOS story always, and always learn something new. But really appreciate your perspective and of course the support. And so, thank you to everybody for being on the call as well, and looking forward to sharing with you a bit about Way. So, I often find that the best way to talk about what Way is to start with where the journey started and kind of where it's gone to. And so, as Dan probably has heard too many times, same with Hall, but the journey really started for me when I was in college. A professor of mine told me that 2/3 of people in this country were going to live a life of pain and suffering due to preventable chronic conditions. And that just stopped me dead in my tracks. I'm an Eagle Scout. I took an oath to do a duty to this country at a young age, as sappy as that might sound, or as messy as things are like they are right now. But I always took that seriously. So when I heard that, I knew what I wanted to do with my professional life was to impact health. And so my first love actually was body movement, functional movement, helping people move in alignment with their natural structures, and seeing how when they did, they report back and almost invariably saying that they were happier and they were better to their spouse, their partner, their friends, their coworkers, the strangers on the street. And so that gave me this very deep sense of reward, and the deepest sense of reward I've ever received professionally, still to this day. And so I wanted to be a doctor. My mentor, who was an Olympic athlete trainer and a doctor, said, don't do it. It's not what you think it's going to be. You're going to have to care for people the way that the system wants you to, not the way that you want to. And so I, naively went to the business side of healthcare, thinking I'd learn the system from the inside and figure out how to make change. And so started at KPMG, audited Medicaid for the state of California, learned a ton about the healthcare system from the inside, then went to Beckman Coulter, which is the first company that did blood testing on humans in a reliable, scalable way. They started that about 85 years ago, but effectively began the modern laboratory diagnostics industry as we know it. And so I moved into New York, ended up being number one in the US, running New York at a very young age, and realizing that corporate healthcare really wasn't going to be how we we're going to make massive impact. And so started building companies. And so was lucky enough to find my way into the founding team of a venture-backed laboratory diagnostics company that I really had a feeling and a vision, which I actually wrote for the company, that was going to make a large impact on healthcare in the wake of the Affordable Care Act. And so while it did make a big dent, and I'm happy to talk about that in more detail offline, the laboratory industry won't be the same. It did make a dent in healthcare overall, but it was sold to private equity and then moved on to the next company, which was building a digital marketing agency focused on the consumerization of healthcare, thinking that if we can get products and services to people quicker, we'll make again more of a shift and a change and a dent into this issue of overall health in our country. And so that company had amazing clients like One Medical. We took healthline.com from being the 9th biggest website on the internet to the 2nd biggest website on the internet. And then it was an Inc. 500 company. It's still running today, but it overall didn't have the impact that I was hoping it would have. And so that's what led me to this observation. There was something my mentor taught me when I was in college. He said, you can never really tell somebody what to do and have in behavior change and have that last long term. It might last for 3 months or 6 months or 12 months, but eventually what you tell them, they're going to fall off. They're going to go back to doing what they're normally accustomed to doing. And so the only way to make real long-term shift in any form of behavior change or any area of behavior change is to create a safe environment, create that emotional rapport and that trust, and then ultimately showing somebody what they're doing, teaching them and allowing them to make their own decisions, and encouraging them to have agency over those decisions, because when they do, that's when real shift happens. And so there was an observation I had when I was at Equinox in New York on the side of my corporate and venture life. I was a trainer just to keep, it was always my passion. And so I'd bring clients in, and as most things in behavior science if they're done well, they seem very simple on the surface. And so I would bring clients in and create this emotional rapport to create this safe, non-judgmental, trust-oriented environment. So I could do the neuromuscular mirroring and the functional movement patterns. I'd bring a client in and say, hey, Shane, how was your day? What did you do? How was the stress? How are the clients? How's the guy Bentley? Was he being a jerk? Blah, blah, blah. What did you eat for lunch? And invariably 3 things would happen. The client would become aware of what they ate when they wouldn't have otherwise. 2, they immediately knew whether what they ate was good or not good for them. And we can and should talk about those labels of good, not good. And then 3, by 5, 6, or 7 o'clock at night, they knew how their body felt as a result of what they ate. So that they already had all the information. They just needed to become aware of it. And so I would write it down. They'd start, becoming more curious about what they were doing and why they were doing it in their own life. And then I would focus on the functional movement patterns, and we'd see these shifts. And about 6 years later, when I was building the predecessor to what's now Way, I called those clients, and over 80% of them had kept that shift 6 years later, which is a really high percentage. Normally, you maybe get 10% shift in behavior change, generally speaking, ever. And so for me, the observation was that it's that moment of mindfulness, that moment of awareness, that really creates the ability for somebody to create their own agency over their decisions and know what to do. And so the idea, and where Way was really born from, is that moment, creating that moment as many times as possible in various different facets of life in a digital product that we can scale to millions of people and make massive impact. And so that's really where Way was born. What we found, again, through the predecessor, was that we have a network of over 3,000 dietitians, and I've talked to hundreds of them personally. Almost every dietitian that you talk to sees this non-diet approach, sees that it's the only way to create sustainability, and sees this methodology of mindfulness as an awareness of the way to get there. Same thing with behavior scientists at Columbia University and at Duke. The same observation coming from people that are experts in their category, and as well people like Dan, obviously, who have gone through this and seen this on so many different levels, individually and in larger populations. And so that's really kind of where Way was kind of born. It's seen independently, but the way into and discussing what the product actually is and what we do and for who. The first thing is that Way, really what we do is we enchant the disenchanted dieter. This is super important. There are a lot of people who are just going through every day, failing on diets and suffering because of that. And Dan, I think, highlighted a couple of those statistics that are super important to understand what's actually happening to people that are partaking in this. But with Way, just really quickly to hit the top level things, we're not trying to prove whether it works. We know it works. 73.5% of users notice that they're thinking differently about how they eat, or they're actually eating differently at the grocery store or restaurant in the first week. So we know it works. We know that people love it. Over 4,000 customers since launch last year. And our goal as we move forward, and what we're raising for actually, is to get to not just profitability, or not just 20,800 customers, but also profitability. And so the way I kind of back into the problem, just from the top a little bit to give you a little bit more detail, Way did enchant the disenchanted dieter in a market where there is no trust. Nearly half of Americans, 120 million people plus, diet during any given year. They'll, on average, try 126 diets in their lifetime, and 83% of those restrictive diets will fail. So they just simply don't work for a massive number of people. And the way I usually say this is, if 83% of cars failed, wouldn't we all kind of stop and say, maybe we shouldn't get in that car and we shouldn't drive around the block? This is really what the problem is. And so what we're unlearning and helping people unlearn is to even go to restrictive diets in the first place. So what Way is, it's an intuitive eating app that uses behavioral science and mindfulness mixed with those three components. We take intuitive eating, which is a clinically proven, efficacious model. It's got 10 principles in it, created by 2 dietitians. It has over 150 clinical studies. And we take that substance, and we're not a one-to-one with intuitive eating, but we put it within the cognitive behavioral therapy model. So thoughts lead to emotions and feelings that lead to behaviors that reinforce the thoughts. That's one of the bedrocks of understanding of behavior change and mental health. So we get behind the thoughts and emotions and feelings that are behind the behaviors, and we ask what's called a miracle or magic wand question, which is used in dialectic behavioral therapy and in addiction therapy. But basically, the way we say it is, imagine finding peace in your relationships with food in your body. What would that feel like? Most importantly, what would that look like? What would you notice in your surroundings? What would you be eating? And how would you feel about your body? And when somebody gets that, when a person gets that picture in their mind, the thoughts and emotions and feelings naturally start mapping that direction, and the behaviors start to follow. And that's why Way works. So it's also important at the very top, or as we get into Way, to really look at what we are and what we're not. What we are a first principle, a safe and non-judgmental place. This is necessary to keep people in calm parasympathetic nervous system, where they can go through self-exploration. As well, we are accessible. We want to be affordable and easy for people to access, so we can make impact, but also because there's nothing in the market that's serving people at that level. We are using proven and efficacious modalities like CBT and like intuitive eating. And obviously, we're having gentle accountability that's really personal to each user's path within the app, based upon the choose your own adventure that they go through. What we are not a shame-oriented or restrict binge eating triggering cycle. Anything that looks, smells, sounds like a restrictive diet, consumers know. And those that are rejecting them, which is a high percentage of the population, they are just totally done. They don't even want a piece of it. They don't want to look at it. So we aren't a green, yellow, red system, which is really a restrictive diet that's masked. And the reason why we don't want to look like anything like this is the restrict binge eating cycle is the problem that we all have. And it's a big problem for mental health and physical health in our country. People restrict their diet. They go through deprivation. That deprivation almost invariably leads to binge eating. That binge eating almost invariably leads to shame and or guilt. And that shame and or guilt then gets the person back to restriction. That cycle just keeps repeating itself. And we're ultimately breaking that by not triggering people back into it, very meticulously crafting the product to do that. And that's really what we've done. We have 3 different pathways, 54 core modules within Way. It's a curriculum, but it's a choose your own adventure. They're 2 to 8 minute long sessions. And I dive more into that offline if anybody would like. The future of the product really is focused on extending the user lifetime and extending the personalization through generative AI. Obviously, that's where the future is. We're just collecting enough data right now to make sure that we can do it properly and do it with high quality. We found a lot of trust in building brand trust in an area where there is no trust. And in doing that, we want to galvanize that with the product that really defines this space from the generative AI perspective. We have an amazing team that's building this with people like Kara Harbstreet, who's one of the most nationally recognized intuitive eating thought leaders, Frank Bach, who's the principal product designer for Headspace, amazing engineers like Kasem and Luke, and even our social media lead, who's an RDN, a dietitian, as well as an MPH. And so we have amazing investors like Dan, who you've heard from actually today. We're really grateful to have Sonoran and Dan, amazing people with Romy and everybody there, as well as Esther Dyson, who's one of the most prolific angel investors of the entire tech era, and some amazing advisors as well, like Marta Shea and Julie, who come from Columbia and Duke. From a traction standpoint, before we get into the last slide here, important to note that we were focused in the first year on increasing retention and getting the quality of unit economics up with Way. So we've increased retention from 45% when we first launched up to 78% by the end of last year. We're hovering around 60% right now. We've had over 4,000 customers. We are positive on our ARPU CAC. We're working on lowering CAC even more and increasing ARPU. And that's one of our goals with our gross margin here as well. But the other thing, the last thing I'll say is on the headline there, we were just named the 2023 best non-diet app by Healthline. So clearly we're already become a thought leader and category leader in this space. And so we're raising a $1.15 million round. We've closed 920,000 of this. The predominant use of this is to grow. We already know we have a product that works. We obviously want to continue to work on product excellence, but it really is distribution right now. And we have a really great go-to-market plan that's in the works. And so that's Way. That's where we've come from. That's what we do. And thank you very much for the time, and happy to answer any questions.
Great. Thank you, Bentley. If you have questions in the audience, go ahead and post them in the chat box. We'll read them out. I'll start with questions for Bentley first. You mentioned dietitians. Can you talk about how they fit into the user base and partner base? How do they actually work in your program or your business model?
Yeah, so the dietitians are crucial, but they really, because it's not a coaching model. We don't get into coaching one-on-one. We take the knowledge and wisdom of dietitians and get them into the session. So we spend a lot of time with each session, making sure we're incorporating not just from the dietitians, but also too from behavior scientists and even Dan, who was a part of our original design sprint, right? Making sure that we have the right inputs from the right directions to make sure that we're giving a path to people to learn that works for 80 to 90% of people. We know that it's not going to work for 100%, but we find that it does work for a very high percentage. So the dietitians are crucial in finding what substance and pathing works in their one-on-one clients and using their coaching that they're doing independently to inform the complementary aspect of the app, so that it's all, again, not cannibalizing what they do, but again, augmenting the practice that they're in with their clients.
Great. Can you talk about the monetization model? Who pays what, and what additional revenue streams do you see coming up in the future?
Yeah, so the business model, it's at $6.99 a month with a 1-week free trial, or a 2-week free trial and $49.99 annually. And sorry, was there another question besides that, or there?
Future revenue models that might come out of data or what have you.
Yeah, I think that the data revenue model could be, but I think in the era of data privacy, it's a different thing for us, especially because we want to make sure that we're not triggering people in this space. We're getting people into a very sensitive, safe, trust-oriented space, and that's really our first principle. So we find that even putting a hook into asking, that with Facebook or with Apple, anytime you put infrastructure in to track somebody, you have to ask for their consent. That actually throws off our users, we found in customer discovery, and makes them feel less safe. But really, the revenue models that we're focused on outside of the app itself go into like actually more of a tiered approach in B2B2C with dietitians, as well as we are working on a service line where we can connect people to dietitians and service to take that strategic area of the market, as well as we see a lot of opportunities for integration downstream as the product grows, to integrate with not just meal kit delivery companies or connected fitness apps. There's a lot of different, I think, like as Dan said, a lot of different wearable technologies, a lot of different areas, but what use is that? And so I think Apple actually with iOS 17 has started to release some really interesting mood tracking, which will be really good for us to integrate into as well. And so those are opportunities for us to create more partnerships and products as well. So there's a lot of different angles that we can go, but I think that's where kind of we're looking right now.
You talk about corporate wellness not working. Are you planning to pursue corporate wellness somewhere along the journey to go back to them with this new and improved method? And what would that look like?
I don't know if I was saying corporate wellness not working, but generally speaking, I think Dan actually probably could speak more to corporate wellness than I could. I don't know if Dan, if you want to chime in on that one.
Dan, what's your take on corporate wellness? Do you think that's effective, not effective, and where do you see that going?
So corporate wellness is a term I don't like, but it is the blanket term for the industry. There are companies investing more and more heavily around programming for their employees to be healthier and higher producing. Absolutely, especially in today's world where companies have to earn, in many cases, their employees coming back to the office. They are needing to introduce not just amenities, but programming that adds real value personally and professionally to their workforce. So obviously that's the bread and butter of EXOS, but beyond just what EXOS does, there's a lot of opportunity there, but it's a different market. Like I find I don't advise our direct-to-consumer companies too early be considering corporate wellness, because the whole sales cycle, value proposition, platform requirements when dealing with B2B are very different than direct-to-consumer. That's one reason EXOS has never gone direct-to-consumer. We've really structured our kind of growth engine there to be B2B. What Bentley's building with Way is direct-to-consumer, leveraging influencers to reach the right types of consumers. I think that's much needed, and I would not necessarily, in the immediate term, think that a pivot to corporate wellness would be that sensible.
Great. So back to you, Bentley. Where do you see it going in the future after dietitians and the direct consumers? Are there any particular markets you're going after, or going after sports in any way, or where do you see it going in the long haul?
Yeah, I think, kind of to Dan's point, I think once we get past those layers, we will have gotten to a maturity point where we can get into most likely payers would be, and into, you call it corporate wellness, but really it's working B2B with employee benefit managers, et cetera. I think that's really where there's a lot of opportunity in the space. Again, there's also the component of what Way does, which is not just in quote unquote diet or nutrition, but really goes into mental health and really goes into stress reduction, because as somebody gets into that calm parasympathetic nervous system state and can go through self-exploration, they can see their behaviors across all parts of their life. And so not just from what channel we're going into, but what the product can become. There's a lot of opportunity for what the product can become over time to expand into more than just this area of life around eating in the body, because those really touch pretty much everything. But yes, the from a channel perspective, it'll likely be into payers and into B2B, into employer wellness programs or benefit managers.
Very good. Well, let's jump back over to Dan. I had a few questions for you, Dan. You talked a lot about the sports market, and some of the questions I was thinking of was there was a big move online with Peloton and Tone and those type of tools. Where do you see that part of the fitness industry going? Do you think that's going to continue? Do you think it's going to become lower cost, or what do you think would be the key drivers there, given your position at EXOS?
Yeah, so the connected fitness market absolutely filled an unmet need, and I think pioneered a category in many ways. To your point, obviously we're accelerated unnaturally because of the pandemic.
Right.
We know some of the issues that came on the back end of it. The challenge as we look at that for EXOS, even during the pandemic, is they're closed ecosystems in many cases. And so what you do on the Peloton is great. It's a great tool, really engaging, but people don't just want to train on one modality. People want to get outside the house. People want to go do boutique spin classes. They want to go to the gym. They want to run, whatever else it is. And so a closed ecosystem doesn't allow your data to effectively port over and for you to benefit, from the insights from that data across the other areas in which you engage. And it's expensive, right? If we know that the monthly cost of subscribing to the Peloton is quite expensive. And for those of significant means and who can afford that and a gym membership and a few other things, I think that market will continue to be successful. I think ultimately, they have to get it to be more affordable. And I think it needs to better sync with the reality of people's lives, which is people do lots of things. And it really should be you-centric. It should be user-centric as far as the data and the programming that comes from that.
Great. My next question is, where do you think AI is coming into every part of our lives today, every part of the business? Where do you think it's going to come in here? Where do you think it's going to be used first?
Yeah, I think the easy answer right now, AI absolutely is something every company needs to be thinking about. But it really, to us in the immediate term, for a lot of our companies, AI can help the company operate more efficiently and more effectively, and can create a more streamlined, personalized experience for users. That doesn't mean we have to be a pure play AI company. I think that we're in a bit of a one of these cycles right now where there's just a rush to invest in anything that can be quote unquote AI. I think, as always in these types of cycles, we'll see a lot more failure than success. But AI being leveraged within the strategy of a company's pioneering a space like Way is doing, and helping us to have more insight and to translate that insight into more personalized engagement with our users. That's what we should be doing, and I think it can help make many companies in this space more effective.
Same question about data analytics. It's been used for a while through wearables, capturing data, number of steps taken, et cetera. Where do you think it will go in the next 12 to 24 months? What do you think we'll be seeing in the use of data analytics in this space?
Yeah, so data's captured, there's analytics, but as I mentioned earlier, very few people are getting the resulting recommendations or programming in anything more than like a surface layer. So that is, in our view, just like a significant area of opportunity. And that's what Bentley and Way are doing in the nutrition space, right? They're capturing a wealth of data that users are entering based upon their desire for engagement. And then, progressively, as we get smarter based on that data, to be able to tailor interventions, community opportunities, based upon the data we have, and to be able to deliver much more meaningful value back to our user base, as a result, I think is going to be a key competitive differentiator. So I think that's a really, really ripe area, and it's one that the best companies are figuring out how they can deliver more value back based upon it.
Well, great. Well, for those in the audience, we put up a poll for those who want to learn more about Way. If you can fill that out, that would be helpful. And Dan, my next question is, can you tell us more about the Sonoran Founder Fund? What's the investment thesis, and what kind of startups do you fund through that?
Yeah, so we are generally regionally based here in the Southwest, providing institutional seed funding across technology. We have a SaaS focus, but fairly broad within that, and we do go beyond SaaS into other areas of technology as well. And our goal is, this is a really burgeoning ecosystem in Arizona and the surrounding states. that is generally suffered due to a lack of institutional capital, especially at this stage. We want to help companies bridge the gap from those friends and family angel type rounds to being ready for Series A. So we are investing at the seed stage. We tend to be pretty hands-on in support of companies, through people like myself who have been operators and help to provide them with the guidance they need to kind of continue successfully on that journey. So yeah, we'd love to see any opportunities that fit within that.
Great. And one more question, Dan, and then we'll switch back to Bentley for a few more. The role of wearables. Wearables have been around for a while, but they seem like they're just scratching the surface. What do you see in the way of the use of wearables in the coming 12, 24 months? What kind of new applications or opportunities will we see there?
Yeah, so to kind of reiterate what I said before, I think the big opportunity is the data that comes from the wearables and making it more usable and more relevant to people. The type of wearable, I think, will continue to evolve, not surprisingly, right? Form factors, less intrusive and invasive, the better, right? So wearables now can be stitched into your clothing, as an example. You don't have to wear something separate on your body. That will continue. So I think, to collect data as non-invasively as possible, and then to personalize resulting programming and services based on that data, there is still like ripe opportunity all through that space.
Great. Thanks, Dan. And Bentley, had a few questions for you around, do you see the healthcare industry coming in to augment what you're doing and support your space, reimbursement and the like, or do you think this is going to be separate for a period longer?
Yeah, I think reimbursement and actually getting a CPT code specifically for what we do will take some time, but I think that there are existing CPT codes that we've already started navigating that will make it the path to going into payers much easier. So kind of bundled into the concept, everybody in healthcare talks about now value-based care ultimately. And what we're talking about is helping somebody way upstream in that experience, being able to shift a behavior pattern that's a long-lasting or lifestyle shift. And that can have myriad effects and benefits into various different, if you will, reimbursable codes. And so that's kind of how we look at the avenue there. I think that healthcare is definitely pushing this direction. I think that the U.S. Surgeon General has done a fantastic job recently focusing on mental health. I think, as Dan mentioned with Pix Health before, really focusing on isolation and loneliness with the new statement that came out last month. I think that was huge, as well as that going back from and that data coming back from the Harvard study in adult development. This is very well studied of what's happening in people's lives with their relationships with other people, not just isolation causing physical health issues and stress. Stress is causing chronic inflammation is causing over 50% of the known diseases come from inflammation. And so this is kind of where we see the future going in where healthcare is starting to lead into. So when you have institutional backing from a messaging standpoint, from somebody at that level of a podium and a pulpit, I think that there's a good chance that we can make significant change if we can continue on this trajectory, continue innovating around this space in lots of different ways. I think that's where Way really has the ability to, and we already are, again, leading in a category that we're also not just the only one, but several players creating. And so I think that that's where, as we get more and more institutional coverage and understanding that the healthcare system, I think the FDA's mantra is the best way to describe my experience with the healthcare system, which is 2 words: safe and effective. And they move slowly to make sure that it's safe and make sure that it's effective. And so it takes time to get there, but they're coming for exactly where we are. So it's kind of that classic Wayne Gretzky line that Steve Jobs said, you can't skate to where the puck is, it's where it's going to be. And we're clearly going where the puck is going.
Great. My last question has to do with mental health. You mentioned mental health, and you've also talked about mindfulness in the app. In looking at many of the areas, education and others, mental health is the #1 issue. Could your app be a useful tool in that area of helping monitor mental health? And would that be of interest to you to pursue if it was?
I think, yeah. So we've actually been approached by a few different companies like Hope Lab, the nonprofit from Pierre Omidyar, really wanted us to dive in, really fully shift the product into teenage mental health. We know it's a crisis, but also too, what we're again looking at scope wise is what we can do with our product today and where it can go tomorrow. So we eventually will, yes, get into mental health more explicitly, and I believe already do. right now. But I think that the scope of that is the most important thing. Mental health is a very massive umbrella. And I think that people that are on the ground on the interpersonal level see that, the behavior scientists see that, people in the space see that. And you have to, because of the sensitivity to people going through various conditions, we have to be very bespoke and very careful of how we enter into each space as well. Although the broad, headlines, everybody hears about mental health, it makes it sound like it's all just one big area. There are a lot of different areas within mental health, and they have to be addressed individually, independently, and with care. And so I think that that's where really what we'll be focused on as we expand from Way's side. So it'll be predominantly, again, the relationship with food and the body, I think, are going to be, for anybody, the biggest ones. Again, I would go back to Linus Pauling and David Hawkins, who wrote the book Orthomolecular Psychiatry in the 70s. So Linus Pauling, the only person to win 2 Nobel Peace Prizes. That was the first time that in the Western medicine world, we started to make a direct scientific connection between your nutrition and your mental health. And that's a really important connection that we've been unwinding for 50 years now. And we need to really catch up to it quickly here to really have an effect in a moment in time where we as a country are in a public health crisis around it. So we definitely look to serve those, but each one of them have to be looked at individually and with care.
Great. Thank you for that. And I want to thank us. That brings us to the end of our presentation today. I want to thank our audience for joining us today. We'll be following up for your feedback. Bentley, thank you for your presentation on Way. And Dan, thank you for your presentation on what's going on in the healthcare space at this point in performance, human performance. It's an interesting market to be in. It seems like it's growing dramatically, and it holds a lot of promise for investors in the future. So we're looking for more investment opportunities there as well. With that, we have recorded this, and we'll be following up with other interested investors for Way. And want to thank everybody for joining us today. We'll be back next week with another series, and appreciate everybody taking their time today. With that, we'll go ahead and close it out, and we'll see you guys next time.
Thanks all. Thanks, Dan. Thanks everybody. Thanks,
Bye, everyone.
Bye-bye.
Take care.